Hello there, in today's video I'm going to be talking about Tesla and Apple. Specifically, I'll be speaking about the upcoming stock splits that they have coming up. I'll be explaining what a stock split is. I'll also be explaining how that affects an investor like yourselves and who should and should not be considering investing in either of these two companies. If you're new to this channel, welcome. My name's Andy and on this channel I like to talk about money and success. If you're interested in making, investing or saving more money, please do remember to hit that subscribe button down below, hit the notification bell, and then you get notified every time I release a new video. Tesla are doing a stock split of 5-to-1. That means if you currently own one share of Tesla, when they split on the date that they're going to split, which is the 31st of August 2020, you will have 5 shares. Now each share at the moment is worth $2,000, a little bit over that. They're pretty much at all-time highs. That doesn't mean you're going to get $10,000. They're not going to take you $2,000 and multiply it by 5. What they do instead is they divide it. So they split that one stock into 5 stocks, but they also split the value into 5 as well. So if, for argument's sake, it's worth exactly $2,000, then it will be worth $400 per share. So your one share of $2,000 will be replaced with 5 shares, each worth $400. I hope that makes sense. So that's what would happen in the case of Tesla. In the case of Apple, they're doing a 4-to-1 split. So they're taking your one share and they're exchanging it for 4 shares. Now, in the case of Apple, the current share price is almost $500 per share. So if you take 500 and divide that by 4, that makes the new share price approximately $125. So that's what's happening with each of those companies. So the date to remember is the 31st of August 2020. That's the date the split's going. Tesla, it's a 5-to-1 split. Apple, it's a 4-to-1 split. So what does this mean to investors? Will it make them money or lose them money? Initially, it really does make no difference at all. So at the immediate point when it happens, it makes no odds at all. As we said before, the value of the company, the market capital of the company remains the same. So that won't change at all. However, what it does do is it gives more investors an opportunity to buy full shares. Sure, people can buy fractional shares on apps and some brokerages, but most brokerages do not allow fractional share dealing. And not just that, some people don't actually like to buy fractional shares. There's something about owning a full share. It's a psychological thing, but people like to own at least one full share, or a lot of people have that kind of mindset. Likewise, some people, believe it or not, actually think that shares are cheaper based on the share price. So there is a good chance that there will be some people that will buy shares that currently are not buying shares. Tesla, $2,000 per share, that's out of most retail investors' price range. They probably wouldn't buy one share for $2,000, but at $400 per share, it's suddenly much more affordable for them. So it does open up to more investors buying the share. So on that side of the argument, you would say that could cause the shares to go up. So on the other side of the coin, both of these companies are pretty much at all-time highs. So you have to make that call. Are they peaking and likely to come back down? Or do you believe that they're going to carry on moving on up? Now, of course, that's something you need to decide for yourself. You need to do your research and figure out, are these companies going to be good investments for the time period that you're interested in investing in? Let's have a quick look at the charts and then we'll come back. So here we are looking at the Apple stock chart here. This is the 1-year chart. You can see it's had a pretty steep rise and it's pretty much at its all-time high now. It's got a 52-week range of 203.32 to 499.47 and it's currently at 497.48. Hence why I use the 500 as the dividing example, because that's pretty much what it's going to be. Now, one thing to note with this share is the beta is 1.23. That means it's more volatile than the rest of the market. Let's have a look at Tesla. Tesla, you wouldn't know a lot of difference. Look, again, straight up, and again, it's pretty much at its all-time high, and it's an even more volatile stock at 1.3 beta. So on the share price, look at the maximum. You see both of these shares have pretty much gone parabolic. There's Tesla and there's Apple. Now, something to note here is that the share split, when they split the shares, it won't actually change the chart. The chart will still look the same. The numbers on the side of the chart is what will change. So who should and who shouldn't consider investing in Apple or Tesla? Well, if you're near retirement age or you are retired and what you're looking for is just an income from a stock, then I would say these shares are probably not the ones for you. Because Tesla doesn't pay a dividend for starters, and Apple's dividend is so tiny, 0.69%, that it's kind of not worth bothering with. Unless you want to speculate and expect that these shares are going to go up in value. And let's be honest, both of these companies are seen as growth investments. Both of them are very future-facing companies. Both of them are very heavily invested in future technology. And I'll be quite honest, they're both companies that I love the products of. I think they're both very, very good companies. I mean, I'm here filming this on my iPhone 11. I'd be editing it on my Mac with my magic mouse, and my notes are down here on my iPad. So I am literally completely sold into Apple. Apple is a great ecosystem once people get into it, and they're bringing out new products all of the time. So there's no reason to think it wouldn't go up for that reason. But if you're looking at other metrics like the PE ratio, then they're at all-time high. Of course, the same goes for Tesla. Tesla doesn't pay dividends at all. So if you're hoping for an income from Tesla, forget it. They may well start paying dividends at some point, but it'll likely be in the very, very distant future. Tesla very much is being pushed as a growth type stock at the moment. And those that believe in Tesla, generally as investors, believe that it's going to grow, the bulls, if you like. Now, there are the naysayers out there, the bears, that believe that Tesla's going to plummet. And there's plenty of people who would argue that, and they've been arguing that for a long time, and so far they've been wrong. So, you know, you have to make your call on that. My view is once a stock split has happened, there's a good chance that both these companies will go up. And historically, with Apple, which has split 4 times before, this is what has happened. So let me go through the stock splits that have happened with Apple in the past. After the June 1987 stock split, Apple stock rose by 8% in the following 12 months. In the next stock split, which was in June 2000, the following 12 months after that, it fell 60%. However, bear in mind that was the stock.com bubble. Now, it could be these shares are parabolic, and there are a lot of tech shares like that. This could be an indication of another bubble. If it is, then this is a possible thing. If we're not in another bubble, we won't. And the thing with it, bubbles are, you never know you're in a stock bubble until it bursts, because that's what makes it a bubble. It's only a bubble when it's burst. Otherwise, it's just a rising market. So it's one of those horrible situations where you don't actually know for solid fact. But that's what happened in that one. So let's move on to the next one. So after the February 2005 stock split, Apple stock rose 53% in the following 12 months. And after the June 2014 stock split, Apple rose 38% in the following 12 months. So 3 out of 4 of Apple stock splits in the following 12 months, it increased its share price in value quite dramatically. So there is a good chance that the investors will get in as a result of seeing it as cheaper. And you'd be amazed how many people actually think a stock is cheaper because the share price is less. If they genuinely believe that if a share price of $50 is a cheaper share than a share price of $100. But you've got to understand, where it comes to value, it's nothing to do with the actual price of the share. But most people don't. And it's a psychological thing. And I think also, not just that, it's also an investing thing. Some people will start investing and they'll have a certain amount of money they'll want to allocate, and they may only have $10,000 in their pot or $5,000 in the pot. To put $2,000 into one stock is too big a percentage of their pot. Whereas if you've got a $5,000 pot, to put $400 into it, into say Tesla, for example, in this example, is much more tenable. And I do think that will have an effect on a psychological level, which personally I think will make them likely to go up. But of course, we can't be sure either way. Without a crystal ball, it could go either way. And these are two very volatile stocks. I think if you hold them long term, however, I do think you'll probably come out a winner on either of these two companies. But that's having a long-term horizon. Short term, I think these two both are likely to have ups as well as some downs. But in the long term, I do think both companies have a rosy future and are therefore probably quite good long-term investments. That said, I've not bought either of these stocks. I shall be honest and let you know that now. I hope you enjoyed this video. If you did, please remember to give it a thumbs up. All that leaves me to say is thanks for watching, and bye-bye.